Good afternoon, my people. What is going on? It is your main man, Charles Tank Harris, the founder and chief visionary officer of the financial literacy platform, Wealth Our Way, where our motto is wealth is not only for the wealthy. I want to welcome each and every one of you to episode 183, How I Make Credit Cards Work for Me. But before we get into today's content, I want to practice the attitude of gratitude and say thank you to each and every one of you who are here with me as I stream live across the Wealth Our Way Facebook page and the Wealth Our Way Network YouTube page. Please subscribe to all of our social media and make sure you tell a friend about Wealth Our Way Network on YouTube. I also want to give the Wow Nation salute to the many members of Wealth Our Way Nation who will watch this program pre-recorded overnight, over the weekend, on their lunch break, anywhere they can squeeze 15 minutes of financial literacy in, and then a heartfelt how are you to the good folks on the Life 101 platform who listen to the audio recording of this very here program. So we talked on Tuesday about the apocalypse, which is this recession that we're heading into or already into, and what can happen adversely to your credit card limits. I hope that each of you were able to extract some good information out of the last 15 minutes of finance and are taking the necessary steps to assure that your limits are not reduced when banks start to review their credit risk profiles and start to lower people's credit limits. I want to talk about positive things as it pertains to credit cards. I, as a financial educator, as a financial planner, as a financial advisor, who has a strong social media presence and desires to reach as many people as possible, I spend a good amount of time looking at content online on various social media platforms and seeing what the so-called experts are telling you guys. A lot of what I see centers around getting credit, whether it's personal credit or business credit. It revolves around getting credit. I do believe credit is an amazing tool. There are certain things, and you guys know one of my biggest pet peeves are when these people online tell you what rich people do. I don't like it. It's used as a hustle to try to get you to have the fear of missing out of some advice that somebody who's doing financially better than you is doing, but it's normally used as a hustle or a gimmick. With that being said, though, I will tell you, I have worked with a varying range of financial clients. I work with people who literally still have an EBT card, but they're starting to work, or they got some money from a grandmother or aunt, and they want to better their financial status. And because I grew up on public assistance and come from neighborhoods, still have family in neighborhoods that have very low income thresholds, I still am in contact with my people and always will be. Conversely, on the other end of the spectrum, I talk to people who have net worths that are nine figures, $100 million and above net worth people. I recently helped facilitate a financial transaction for the family of a billionaire. So I literally work with all ranges of people. As such, what I like to do kind of as the financial services Robin Hood is not Robin Hood, the trading platform, but Robin Hood, the bow and arrow guy. I like to take the information that I do see that wealthier people are utilizing, if it can be used by people who necessarily haven't garnered that level of wealth right now. I want to share that information. That's the whole point of Wealth Our Way, to bring top level information into underserved communities. With that being said, one of the things that wealthier clients of mine we have an aversion to paying taxes. I'm not wealthy. I do okay for myself, and I have an aversion to paying taxes. I will pay my legally required amount of taxes. I'm not trying to pay a nickel more. I am trying to find every way to lower my effective tax rate. One of the best ways to lower your effective tax rate is to use credit. And I'll explain that, even though for a lot of us who's listening right now, this won't pertain to you today. But taxes on income are the highest taxes that exist in America. When you take money into your possession, whether it's investment income, whether it's earned wages income, business income, income is taxed higher than everything else. So one of the things that you try to do is take as little income as possible. You will see wealthier people pay themselves from their companies and things like that last and pay themselves the smallest amount they can, but be able to have cash flow from the entity or their assets. Credit comes into play there because if you have an asset that is growing and you know the minute you sell it, you're going to be taxed on the gain, why sell it? Let's borrow against it. You can borrow against it with brokerage firms, with banks, with personal lending, and with credit cards. So one of the things that I tell people is if you don't have a problem paying credit card interest rates, so long as they're lower than the alternative, which could be your income tax rate. With that being said, I want to focus on how I use credit cards to make the best use of a dollar, which is one of the principles from my ebook and our Wealth Our Way platform, BUD, best use of a dollar. The first way that I use credit cards to my advantage is I have my credit cards pay me as much as humanly possible. I frown heavily on any credit card that charges an annual fee. If you charge me an annual fee, I need to be able to know for a fact that I'm going to get more from you than I am paying in a fee, whether it's through statement credits, whether it's through perks, whether it's through cashback rewards. It has to outpace what I'm paying. But in most cases, I don't want to pay any annual fee at all. I want zero annual fee. What I want from my credit card is actual money that you're going to give me to get your card. Recently, I've procured 2 credit cards, the Wells Fargo Active Cash card and the Capital One Saver card. Both of those cards were running promotions when I applied for them. The Wells Fargo Active Cash card is going to give me $200 cash after I have charged $1,000 on the card. Easy for me. I told you guys before, and I've been putting my business out in the street, but I have a lawyer on retainer. My lawyer bill is damn near $5,000 every month, and I pay by credit card. So I know for a fact that I got to pay $5,000 next month. I'm paying it regardless. So why not put it on this card, 1,000 of it on this card, and get $200 back? Just gave me a discount of my lawyer fees. The other card, the Saver, Capital One Saver card, you spend $500 and you get $200 cash back. So here it is, me getting 2 brand new credit cards that I only got because I'm still increasing my credit score and credit profile, increasing my total amount of credit available to me so I keep my utilization levels low. And I just found a way to get $400 of what I call free money, cash in my pocket, by using a credit card to pay a bill that I was already going to pay. This differs from the advice you may see online where people are just telling you to go out and get credit and you don't have any way to pay it back. You don't have enough income to support it. Be strategic in everything that you do. These are expenses that I already have. I'm already going to pay. I am not hurting my credit score by applying for the new credit. Yes, I had hard inquiries, but the offset of being dinged 2 to 4 points for a hard inquiry, of getting my credit balance, both of those cards gave me a collective $12,000 of new credit. That increased my available credit and thus lowered my utilization rate. I'm down under 4% for credit utilization right now, which is amazing in the eyes of the credit bureaus. So getting cash for getting a credit card is the number one way that I make credit cards work for me. Way number 2, still staying right there on the legal fees that I pay. I had charged a lot of the legal fees for the previous month on one particular credit card, knowing that I had 30 days to pay it before it hit my credit profile as carrying a balance, gaining interest, utilization rate, all the bad things. I knew I was going to be applying for this Active Rewards card. They had a 14-month balance transfer special where there was 0% interest on any transfers that you transfer over. So what did I do? The credit limit on that card was $10,000. I transferred the maximum I was allowed. It wasn't quite $10,000 because they charge you a 3% fee for the balance transfer. So I believe I transferred $9,800 over and paid the fee, or $9,780, and the fee was the difference. I didn't mind paying the fee. Why not? Because they've given me $200 as soon as I spend $1,000. So the fee that they're charging me for the balance transfer, they're paying it technically. And now I have $9,800. I have 14 months to pay it with no interest. That means that $9,800 can stay in my money market account or my bank account or my savings account and grow for me. And I just pay the minimum amount every month on the credit. Gangster tip about this. When you balance transfer, even though I'm using almost all of the available credit available to me, because it's not subject to interest, it doesn't report on the credit bureau as utilization. It reports on the card, meaning I can't go spend any more money until I pay some of it down, which I need to do to spend the 1,000. But it's not showing the credit bureau that I'm using 98% of the available credit. You have to learn and know these things. So I'm paying the minimum amount every month. And then at month 14, I'll stroke them the difference for the balance. And I will have used the time value of money over the course of the 14 months, which brings me to my last point on how credit cards work for me. Best use of $1. I want time value of money. I want to use the credit float every 30 days to charge things while my money stays in the money market account, earning me interest, and then pay my balances in full before the credit card revolving balance rolls over and I have to pay interest on it. The other thing I like to do is cash back rewards or just rewards in general. 2%, 3%, 5%. Make sure you know what your credit cards are giving you. Travel, gas, shopping, dining. Make sure you are maximizing. Do not get caught up. See, it's a battle going on between you and the credit card company. The credit card company is offering you these perks because they want you to go out and spend more money in these areas and earn them interest and earn them merchant fees. You have to be protective of your own finances and do what you would have normally done. Don't go out to dinner 3 times more because you're getting 3% cash back on dinner purchases. But if you already go to dinner, make sure you use this card when you go to dinner. I spend a lot of money in gas. You guys know I'm back and forth from Georgia to Jersey. I have a 2019 truck that has 156,000 miles on it. I put $50,000 a year, 50,000 miles a year on my truck. It's a lot of gas on a V8 engine. I use a gas card that gets me 3% cash back or 15 cents off a gallon. All of these things add up. Don't think that when you see somebody who makes a lot of money or has a lot of money or who is financially successful and think you can't do what they do. It goes back to that old commercial of, I forget what company it was, but it says, "How do you think I got so rich?" Make sure you are using the smallest possible advantages that can work in your favor to build your net worth. At the end of this, last year, I got my 1099 from 2 different banks totaling $800. I got $800, but I had to pay tax on the $800, but I got $800 cash for opening bank accounts last year. This year, I plan on getting $4,000 for opening bank accounts. I plan on getting almost $2,000 from credit cards. That's $6,000. Your numbers may not be the same as my numbers, but even if you got 10% of that, that's $600. I am showing you how to put free money in your pocket. So that is how I use credit cards to work for me. I want you guys to have an amazing weekend. I will see you on Tuesday. We'll be right back here at it with 15 Minutes of Finance on Tuesday. And please, please, please remember, wealth is